Shell has a problem. It wants to become the biggest power company in the world in 15 years. It is still an integrated oil giant hurt by its weaker chemical and downstream businesses. It wants its power sector division to deliver 8 to 12% returns. It is slowing its pace of buybacks because it can't make enough money to cover capex and shareholder payouts. Shell sold the idea of becoming a more climate-friendly company to shareholders, but it required rising oil and gas prices to do it. Then the market turned. Investors want big oil to go green, but they don't want to suffer lower payouts to do it. One possible solution is AI. It can do things like cut upstream costs, shave off downtime, increase output. Maybe you can cut costs enough to improve your cash flow. One example, Shell saved $2 million by avoiding refinery outage using predictive analytics, basically catch an outage before it happens. Bloomberg NEF estimates refineries can cut maintenance costs by over 20% when using this kind of technology. This can be key to a producer stuck in the middle of the energy transition.
I recently caught up with Harry Brekelmans of Shell and asked him about the environment for oil.
Today we're in a quite challenging environment. I would say that puts all the more the onus on us to be very responsible and efficient in what we do and how we go about our business.
When you take a look at the technology that's going to be coming up then, what are you most excited about? Is there one that you're most jazzed, you think is going to have the biggest impact?
I wouldn't point at one single technology. I would say digital. We talked about AI and its applications before. I think it's so pervasive, so it will play a significant role in all aspects of our business, without necessarily pointing at one in particular. I would point at the role of hydrogen, for example, and I think the world's just coming alive to the potential that hydrogen has in all aspects, in helping to decarbonize the energy mix and provide a multitude of solutions from applications in transport to applications in storage.
So if you walk me out 5 to 10 years, what are you going to be spending all the money on? What are the projects that are going to be developed?
Well, we'll still be spending money on traditional, so to speak, oil and gas projects, of course, because that is still needed in the overall energy mix. But I would imagine we'd be spending significant amounts of money on electrification through renewables. We'd be spending significant amounts of money on developing ways to turn hydrogen into fuels and energy products for people. We'd certainly be very present in biofuels. We'll be investing in carbon capture and storage, or the use of CO2. And we'd be spending money on nature-based solutions, as we call them. So ways to use nature to sequester and absorb carbon.
Shareholders want that. But then the stock underperforms like a Chevron or Total, right? Like the quarter was confusing for shareholders because they want it, but then they're upset about the slowing pace of buybacks. How does that inform the conversation at Shell?
Well, I think in one way it tells us that we need to do even more. We need to do it faster.
So not pull back, go full speed ahead?
Yeah, no, I certainly feel that generally, and I think this is the consensus globally, isn't it, that we're not moving fast enough collectively. So it really suggests that we need to up our efforts in terms of catalyzing actually the world to go faster.
But Shell's definitely been front and center in all of that, and you haven't gotten rewarded for it. So why do it?
Well, I think you also have to look at this in as you said it's a complex world. You need to look at it through lenses of the near, the medium, and the long term. And I think, indeed the markets struggle to sort of read between the short, the medium, and the long term in terms of the current environment, whatever the future will bring, and how companies are navigating through that. It's on us to create more clarity around that. And then, of course, to follow that with demonstration. So I think we're encouraged to more demonstration. Also helping to clarify, I think most importantly perhaps, to bring others together with us in terms of finding those solutions.
So then the rhetoric after the quarter, I think one analyst said Shell wanted to do it all and they failed.
Yeah. Well, they have high expectations. And we live to fight another day. We have the next quarter to go and then much beyond that. So I think we generally feel that we are on the right course. But of course, you have to demonstrate it out there every day.